vouching. What is vouching? Vouching is when you take a number from the accounting record. You take some transaction from the accounting record first. Notice, like from the sales journal, from the purchase journal. Then you look for support for this document. You vouch for support in the source document. Like you would look at sales invoices, shipping document, sales order, so on and so forth. If you're looking for purchases, vendor invoice, receiving report, so on and so forth. So vouching is starting with the record on the accounting record, the books, and vouch for support. Vouching is where the auditor validate the authenticity and correctness of the transaction recorded in the accounting books. It's already recorded. All what you're looking for is the support, is the source document. This is what vouching is. And this is achieved by examining the associated source document, which is this is what you look at next, to provide evidence for each transaction. Simply put, vouching is like checking your receipts against your credit card statement to make sure all listed purchases are accurate and valid. So you open your credit card statement and you have a bunch of purchases on it with the dollar amount. Now what you do is say, okay, they charge me here $100. I purchased from the supermarket $100 worth of goods. Let me check my receipts to make sure the $100 is correct. So let's take a look at an example of vouching, and we're going to use supplies. In the company ledger, you spot an entry indicating a payment of $5,000 for office supplies in June. Great. You're going to vouch for this transaction. What do? You would ask the company to provide the invoice or receipt, purchase order, and receiving report for this particular transaction. If we purchase something for $5,000, we should have an invoice, we should have a purchase order, we should have a receiving report. What you do, the company will provide the documentation, and we purchase them from Office Supplies Company, and we look at the date detailing a purchase amounting to $5,000. We would look at everything: the purchase order, the receiving report, vendor invoice. Well, if everything matches, you cross-check the details, the vendor name, date, amount, and description of items bought. If everything is good, you vouch for that $5,000. Upon examination, everything matches perfectly. The invoice from Office Supplies indeed support the recorded transaction of $5,000 in the cash disbursement journal. Now let's discuss tracing. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Tracing is when you start with the source document or the support document, like you're looking at sales invoice, receiving report, vendor invoice, etc. Then you trace back to the accounting record to make sure the transaction is recorded. So tracing refer to what? Tracing refer to the process where the auditor start first with the original document, with the original source document, then traces them to the accounting books or journal to make sure they are recorded. So the auditor is looking to make sure that all received goods, for example, we have a receiving report, have been properly recorded in the appropriate journal. So you would start with the receiving report. You would start with the source document. Then you go to the record. Versus vouching, what did we do with vouching? Vouching, we started with the accounting record. Then we went to the source document. Kind of the opposite of each other. Let's take a look at an example for tracing. Let's assume you come across a receiving report of 100 computers received by ABC Corporation in June. Well, to make sure all received items are properly recorded, it means you are testing for completeness, the auditor decided to trace this forward to see if this receipt is reflected in the ledger or the acquisition journal. You would start with the receiving report. You note the date, the quantity, and the supplier name. You would say, okay, then you go to the acquisition journal to find the corresponding entry. Well, you're supposed to find a corresponding entry for 100 computers from that supplier in June. Well, after some examination, you find the entry, everything matches, amount, date, dollar amount, we're good to go.